Good afternoon, traders. I trust you are all well. We are fastly approaching April, which is a fantastic trading month, and historically an even better month for the Great British Pound. So here are a couple of scenarios how you can catch early entries into buying the pound throughout April. Firstly, we can't take away we're currently in a confirmed downtrend. By price being able to move lower is going to attract the big major players in the game to buy at cheaper prices. So we're happy with the position we're in. For any of you that can't identify this as a current downtrend, perhaps you're looking at too wide of a scale and seeing the overall move from A to B is moving up. So yes, we've seen an upwards move as of recent, but if we're calculating the last two cycles working right to left, which is the easiest way to understand the current direction of market, we can see prices now cycling and we are forming lower highs, lower lows, which is a pattern we use to indicate trend. Two cycles confirms our trend, in fact. Where we're looking now, we can see prices come back after a slight retracement. Buyers were not typically as strong as we've previously seen in these bullish moves. So this area here did indicate and did welcome more selling. And we're now in a move that is pushing down to lower support, which is in reach. So let's just take a quick look at the pound and how it historically does perform throughout April. So here we have a seasonal chart of the Great British Pound over the last 45 years. And to take a quick look, you can see the market's performance throughout April and May over the decades. It's a very aggressive push to the upside. So it's introducing a lot of buyers during this seasonal period. Sharply, as we do approach May, we do see that drop off. And in fact, here is a great time to sell. So throughout April, we're going to focus on how to be a buyer in this area. So essentially, the back end of March, we are looking for price to bottom out. Pound does show strong reversal patterns. Anyone familiar with double bottomings, inverse head and shoulders, is probably what we're going to be looking for. So we can see here, historically, the pound does outperform throughout April. So let's go back to the charts and have a look how we can catch these moves. Over the last few months, especially the back end of last year, we can see that pound was in a strong uptrend. The market was moving to the upside. As of recent, we have been stuck in a daily channel where you can see prices have been rejecting lower support, providing multiple buy opportunities, taking price back up to the upper side of the channel. We have had a couple of foul breakouts, and as you can see, price aggressively come back within our channel, giving us a better understanding as where price is playing between. Just to zoom in slightly to look at the current behavior, you can see that this most recent phase 2 has allowed buyers to push price up. Big bearish pin bar, and we've now seen the market move back towards potentially the lower channel area. So I'm looking at lower channel as perhaps a maximum low where we can then become a buyer, or even the most recent low in here to look for a double bottom to take price back into this bullish period over April. This hasn't stopped us trading the pound short over the last week. There has been some fantastic opportunities, one being what we caught last night, where we did see a multiple rejection back from support into resistance. Big bearish engulfing candle rejecting the 200 moving average, and we're looking at around 30-40 pips profit as current. Any intraday day traders, it's very important you start to manage price action, start to understand the bars that are being presented to us. If we're in a downtrend just like we was previously, and we're seeing areas like this where there's a lot more buyers stepping in, lack of selling, a lot stronger buying candles, then we're going to take our foot off the gas, perhaps look to take profit from any short positions we have, and then start to think about a reversal pattern, a movement back to the upside as we approach April to fall into this seasonally bullish period. So something to think about there. Again, intraday traders may look for another bounce off the 20 moving average to get one more cycle into daily lows here, so daily support just ahead. That being said, if you do get up into the 20 moving average, you've got about 60-point move back down to recent support. So again, intraday traders, there may be one more 1 hour cycle in there for you. The 4 hour for me has already shown it's in this progressive move to the downside. This for me is a 4 hour phase 1. So again, the 4 hour can reach here. If you're not in this, use a 1 hour pullback, allow a 1 hour higher low formation back off the 20 moving average will be ideal, just to give us a more disciplined approach to getting into the market, and then a phase 1 back in down here into recent support. If you're not confident trading perhaps a phase 2, if you're not confident trading this late into the move, just sit tight and start to pinpoint an area where you can look for a reversal. I'd be looking anywhere as channel support as perhaps the last resort, shall we say. But I do think we may see a double bottom in here, messy price action, and then an aggressive push back to start this seasonal period in April. In terms of managing these positions, you're going to have a daily entry. So daily limit order traders, you may want to place a limit order at channel support and take an aggressive move higher. You may want to wait for price to break the daily high and cycle within this channel. What I would personally do is use a 4-hour time frame and look for the first bullish cycle above recent high. So I'd be looking at somewhere in here as a trend-based formation trade, providing price doesn't break the low. So we still have a higher high, higher low, higher high, higher low. Next entry to take price back towards the upper side of the channel. So there are multiple reasons, multiple areas to get in the trade and to be a buyer. From a short term, I believe you have one more 1-hour cycle taking price into recent support, and then we're going to look for a couple of scenarios to play out. One being a sell limit order off of channel support. The second being 1-hour cyclicity, getting you in nice and early. The third being the first bullish candle to reject a double bottom formation. Or if we see an inverse head and shoulders, then you want to be entering up here to be a buyer to take price back within the channel, back towards channel upside. So a couple of scenarios there to play out. Of course, the way the dollar's performing at the minute, we are seeing root dollar strength. And that has, of course, helped pound move lower, although pound price action has been quite choppy. But again, a dollar phase 2, so the selling part of an uptrend, of course, will help pound and give pound that bit of a boost it's probably going to need as it approaches this area. So it's a couple of things to keep an eye on, guys, but we know April typically is a strong month for the Great British Pound. So find yourself an area for price to bottom out. If you're familiar with reversal patterns, look for your double bottoms, inverse head and shoulders, allowing you an earlier entry into the move. As that daily move progresses, use your smaller time frame cyclicity to add into your positions, or essentially get your first less aggressive trade placed. Once we're in this move, again, as I said a minute ago, scale into the position, add risk into the position. Typically, it's a strong month, so each and every cycle you get on a smaller time frame, start to use some of the profit from your first trade to add into second, third, and fourth trades. Good luck, traders. Any questions, feel free to get in touch, but I wish you a fantastic month of April.